Hello and welcome to Fintech Insider Insights. I'm David Brear, Group CEO here at 11FS, and we are live at Money2020 here in Europe. In this episode, in partnership with Alloy, we are talking about the growth of embedded finance use cases, the huge opportunity this space provides, but also the huge importance of really getting it right on the compliance and data security side so you don't fall foul of the regulation. There's always regulation, isn't there? We've seen more and more headlines of companies who haven't got this right. So today we want to give a bit of a masterclass in what to avoid and how to get that right for the license holders and the licensee banks themselves holding those services that sit underneath these things. So to have this conversation, I am joined by some super duper awesome guests. Firstly, I am delighted to welcome back to Fintech Insider, Laura Spiekerman, who is the president and co-founder of Alloy. How are you doing, Laura?
I'm doing well. Thank you for having me.
How has your show been so far? Have you enjoyed your Money2020 experience?
I have. It's nice to be in Amsterdam rather than Vegas.
Is it?
It is.
Yeah? Okay.
Yeah. This is a better city.
Is it? I mean, there's sunlight, isn't there? And sunshine today,
and
it's a beautiful thing.
Real canals, not fake canals.
That is true, yeah. After a few days, that made my brain a bit weird. I was like, I'm in Venice, but I'm not in Venice. Yeah. It is weird, but hey-ho. And for anybody who doesn't know, tell us a little bit more about you and Alloy.
Sure. So Alloy's been around since 2015. I started with two co-founders, and we are an identity decisioning platform for the financial services market. We serve about 600-ish clients today, banks and fintech companies. Think about banks like Live Oak Bank or Grasshopper Bank, fintech companies both in the US and Europe, UK, companies like Liberis. So we're now sort of global as of the last few years and providing kind of every service in the identity decisioning stack that you can think about.
It's very cool. You guys have gone from strength to strength, haven't you, over the years? It feels, does it, like, I've been running 11FS for 8 years.
Yeah.
It feels like
we're both old.
Well, no, that's like, when did that happen? Do you know what I mean? Like, I feel
know.
like it's like the longest and shortest period of my entire life.
That's exactly right. That's exactly right. Being here is always a good milestone for being like, oh my God, it's another year and we're still doing this.
Yeah.
We're still here.
What I said to somebody earlier on is like, I remember when, oh my God, that was 8 years ago.
Yeah.
Like, oh dear. But anyway, this is getting depressing. We should move on for everybody else. But don't get old, guys. It's a trap. It is also a pleasure to welcome to the show Charles McManus, who is the CEO over at ClearBank. How's it going? You good?
Really good. Great to be here with Laura and yourself and to come back again, David. I love it.
I know. I mean, it's been you've been on the show a few times now, haven't you? For anybody who doesn't know, tell us a little bit more about ClearBank.
Yep. So we set it up in 2016. Listen to the story. It was actually 7 years ago in relation to when I started with Nick Ogden. The first new clearing bank, 250 years, agency banking. So we were all about clearing payments and settlement for regulated FIs. So if you're a bank, building society, credit union, EMI, we'll do all the back end payments for you. But we've grown quite a lot since then, as we're going to go and talk on embedded banking and all that we've done in the UK. And now we're looking to take that from a regulated space to a non-regulated space. We're also looking at digital assets, and more efficient use of digital clearing, digital sterling, indeed ClearBank stablecoin perhaps on its way, and as well as a European license in the US. So we're having a really tremendous time in terms of growing the business.
I feel bad now. Like mine introduction was poor. Like, he's a busy boy, isn't he?
He's
So
busy.
it's good.
He's busy.
But it's amazing though, and a lot of what we're going to talk about. I mean, when you've got the base level capability in place, what you can do with that, that long list of, I'm sure the backlog, the really cool stuff you're really not telling us about because it's super, like when you get everything right, either from an operational perspective, from a technological perspective, from a talent perspective as well, you can do super amazing things, can't you? But let's get onto that as we go through. So maybe if we start then with a bit of a state of play of where embedded finance is. It's a reasonably sort of tumultuous time, isn't it, in terms of the market and everything that's going on. But maybe Laura, if you want to set the scene for us, I mean, what does the embedded finance space look like today?
Yeah, so I think it's really tumultuous. But I think big picture is it's still an enormous market, enormous opportunity. We've seen some recent stats that look like in 5 years, it'll be a $35 billion market, huge market, but it's going through it. And it's sort of growing pains time, I suppose. It's sort of like we're in our adolescence and we're figuring out what not to do what are the rules we all have to abide by, shaking out some bad actors, some bad behaviors. We're all hopefully improving as a result. So it's definitely tumultuous. I think if you look at just the opportunity though, and I always think about digital fintech as a 25-year exercise. And I think about it more personally, which is like, what is my own experience with fintech? Embedded fintech, we has all sorts of names and reputations right now. But I look at it from a consumer standpoint, which is that I want as much obfuscated as possible. I want to have a really seamless experience. And in the long run, that's what we're building. That's what we're going to do. And you can call it all sorts of names. And we're going to think about, the experts around us are going to build it in the safest way possible. But it's, in the long run, we're super bullish on the idea that you can have these incredible experiences built into all sorts of places in your life. And as I look at my financial life, I had a car payment I was looking at earlier this morning. That is still so painful. I still use paper checks for all sorts of, there's just so much room to improve and to make all these, paper checks.
I remember them well,
Yeah.
back in those days. But yeah, it's crazy, isn't it? That infrastructure part and how much, probably that idea of the size of the market is probably quite conservative given the opportunity, right?
We've seen definitely larger estimates, but I think it's just enormous, and so we're still working from what is the ideal consumer standpoint? What does that experience look like? I know ClearBank's doing some stuff in corporate experience as well, and that's a massive opportunity. So there's just room to improve, and we're still super excited. It's just about getting it right now because we've seen what not to do in the last sort of 6 months, 12 months.
And it's, you say sort of bad practices, bad actor. The bad actors bit I sort of get. It's bad people do bad things, on purpose. Is there a bit of the industry growing up a little bit? And turns out financial services, guys, sort of hard, right?
It's hard.
300 plus years of no clearing banks or, core infrastructure across all of, this stuff's difficult.
It's really difficult. And it should be difficult to some extent. Messing with people's money is it's a big responsibility and it's not to be taken lightly. There are bad actors. And then like you're saying, there's sort of, maybe some actors with good hearts, but don't know how to quite do this and they're learning. And there's a lot of teams out there building digital, fintech experiences that don't come from compliance backgrounds and kind of got into this and the money was good and growth was easy. And you can see how good intentions kind of went awry a little bit. So I think now we have to figure out what is the right model so that people can still be good at what they're good at, build the great experience. Maybe you don't have to be a compliance expert yourself, but how do you sort of build in all those guardrails and make sure you're doing things safely and make sure your bank partner, your whoever it is you're working really closely with. And I think we're going to have to form new models to demonstrate to the market what that looks like. Yeah,
there's a lot of optimism, but optimism can quite easily, how hard could it be? Banking turns out very difficult in terms of the processes around it, but regulatory structures as well. And Charles, you talk a little bit about, the UK regulatory system is one thing, but if you're planning on it's a big world and there's lots of different regulators, aren't there?
It is. And if you look, building on Laura's point, right, if you look at the marketplace is getting a quite poor reputation. Investors actually are waking up to the fact EMIs in the space, BaaS players like Synapse in the US, actually is quite a dangerous regulatory place. And we've seen it with Rails R or Rails Bank that wasn't a bank, they had to go to Rails R. They got into issues. Solaris Bank also, they've got into issues, right? In the UK, Modular also is known FinCrime, AML, doing all that strongly and properly and that can consistently, rather than to just grow, top line growth and not thinking about profitability, not thinking about the core regulations that you're actually on the hook for and something going wrong.
Yeah.
And indeed, I've just appointed Emma as our UK CEO, who is our chief risk officer. And some people look at that and think, are you absolutely crazy? In relation to, we want less risk and we want more commercial individuals. Others actually commented, actually, that's a really smart move.
Sure.
Because if you want to be successful in this and not have a regulatory intervention, you've got to know all your compliance and regs, and your clients have too.
Yeah.
And I've always been passionate about this in building ClearBank on only dealing with the regulatory best. And we say goodbye to a number of clients for fin crime and AML reasons, but they turn up elsewhere in the ecosystem. They're tracked by the regulators, et cetera, et cetera. But if you want to sustain in this, and we in as industry actually want to build, and again, you look at Europe in relation to, can you get harmonization of fin crime across France, Germany? It's all like separate regimes, compliance. It's easy to trip up and go wrong.
Yeah. And I mean, there's no exceptions at that point, right? It's, there's a big reason why big banking organizations, the CFO and the chief risk officer, really good candidates for the CEO repeatedly for exactly that reason, right? You wouldn't have a football player who didn't understand the offside rule, right? You've got to understand the rules in which you operate in to be able to, manage them effectively, but, play within them as well. So
and if you move on from banking to payments, which obviously we're in as well, you want to be a global operator, but everyone wants their local payment checkout and their local IBAN and their local way to get to your consumer. That adds all of that multiplication in relation to the local rules as well as the global rules.
So, Laura, I mean, if we go back to I feel like this is going to be a therapy session slightly here, but if we go back to the beginning then for you and the journey, I'm like, how hard could it be? Let's go start a business. Goodness me, it is difficult. And there's sort of challenges and the trials and the regulatory side of things is one thing, but building a business is tough, isn't it? It doesn't matter what type of business. So, I mean, looking back, would you have done this again, or
no.
is it?
No, I'm glad I didn't know how hard it was.
We need a couch. There we go.
Yeah. No, I'm glad I really didn't know. I think we started in 2015. There were fewer tools that make building fintech easier. It's definitely not easy today, but there are things that make it a little bit easier. Think about something like SOC 2 compliance was a huge cost, a huge process for us internally. Now there are tools where we can just pay someone else to help us get through that process, and there's great automation of some of that. Or Plaid, account aggregation, all those things just had to be built 10 years ago. And I'm grateful for all of those. It's made it so much better to see other fintech companies come up faster, but it's an incredibly painful process to build not just the business, but then sort of all of the components of a compliance-oriented business where we have banks who trust us with something so critical. It's do or die for them.
Sure.
If we get something wrong, they are in really big trouble. And so it just took a long. Time was the. I don't think we could have skipped anything. Right? There was no hacks. There was no sort of magic tricks. It was like put one foot in front of the other for 9 years, and get banks to be willing to work with us.
Yeah, there's no sort of shortcut to credibility, is there, in that space? And like you say, particularly with in the B2B sense, essentially creating those things for people. It's the old adage of nobody gets fired for buying IBM, right? But does all projects go well? Potentially not. So it's an interesting landscape, isn't it, to build that credibility? And so was there I'm going really off piste here, but I think this is interesting. So stay with us. But was there a kind of a key moment for both of you in that journey then? Because almost, I mean, I've seen this with, and we've, 11FS, we built our Foundry and platforms and different types of things that we've done. The first people who believe in you, that first partnership, that first structure, and actually building that off, your backgrounds, your credibilities. Talk to us a little bit about that.
One of the key moments for us was a bank called Radius Bank at the time. Now they've been acquired. But the CEO of that bank, Mike Butler, who now runs Grasshopper Bank, was really critical for us. He was just willing to sort of take a risk with a vendor like us to work with a startup. But he was actually excited to work with a startup because he wanted the best technology possible. Sure. And so for him, that meant that we were sort of the only solution, and we didn't have $10 million in the bank when he wanted to work with us, and he made it work. And so I think there were a couple of people like that, just individuals who saw, I need the best possible solution. I'm not going to cut any corners on my tech and my user experience and my data security and blah blah. So I will use these guys, and it made a huge difference for us. That one always stands out to me as sort of a big deal. And there were some other clients who I don't know if I can name, but some other sort of critical moments where we punched above our weight, and it just made a massive difference. And a lot of that was luck, right? And just being in the right place at the right time.
It's weird how I used to work at Gartner, and a lot of time spending, core banking selection processes and blah, 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 blah. And, often technology is one thing, but you pick people you want to work with. Like when the muck and the mire and the grind of delivery, you want to be able to talk to somebody on a Sunday morning and still be friends. Is there similar moments for you, Charles?
Yeah, it sounds so familiar. We had some amazing first clients. I think of Tony Colleen, for example, who's the CEO of Allpay that are here, and a growing card processor, been with NatWest and Lloyds for years. He was desperate for something different. And he was quite happy to be the guinea pig and test, actually do it different in terms of APIs. I also think he's retired now, but Peter Cox, who used to run Qantas and then Solaris bought, again, he was the same. He was fed up of trying to get hold of a CEO in that organization that would never answer the phone. He always used to say, I haven't got in for NatWest, they do a number of good things, but this was his feedback was, in incidents, they never tell the truth. We don't get transparency. Things go wrong in this industry. I need a partner that's honest, transparent, be there tomorrow, can work with and make it better, and I can sleep all night. It was all of that pent up. And again, in testing. And then actually, I'd much rather have someone I can work with and trust. Back to Laura's work, especially in terms of money and payments.
Yeah.
And it will be there tomorrow. And then building on those, and similar, we were spending nothing on marketing, and it was all our existing clients were referral to it. That's the best way to actually build a business in terms of the product and substance, rather than flashy websites and all the vaporware and all of that. It's substance. Are there people actually doing this? Show me. Yeah. That's what built our business.
It's weird, isn't it? B2C virality in a B2B business. That's definitely how I've seen you. The ripple effect of doing good things and more good things come to you. That's an amazing space to be, isn't it?
It is. Yeah. And I think there's also something in, building a product that people can try, which I think in financial services is really hard for all the obvious reasons. We had a product where we just did tons of tests for people. So we said, hey, just give us 1,000 identities, and let's show you that there's a better way to do this. It's going to make your customers happier, your fraud lower, all sorts of stuff, your conversion rates higher. And so that was sort of the happy medium between being a business that financial services vendors are so untouchable in certain ways, but we tried to make it real and usable and developer friendly from day one.
Different types of customers, different types of audiences in that space. But Charles, you sort of touched a little bit on. You're obviously famed for the UK impact that you guys have had, and in fact, we've had you and we've had Nick on the podcast a couple of times talking about. Nick used to live 3 villages away from where I live in Norfolk, which is kind of weird. So I know where he was when he thought about the idea of it. But obviously, UK's very much been your focus. You've got aspirations of a much bigger strategy, a bigger challenge. Tactics of hitting the US, there's a lot of different organizations that have tried that, have attempted, and it's a tough market. It's a very big market, but it's a tough one.
And I've worked in the US in my investment banking career and the rest exactly. And a lot of big British companies have gone to the US, lost a lot of money and come home making a load of people redundant. From our perspective, remember, we're one platform. We chose Microsoft Azure and APIs ISO 20022 from day one in 2016. I remember we were educating the FCA on cloud. So those were always been our roots in relation to API only. It's a platform that we made deliberately to scale. And obviously in doing it in sterling and getting it, but a number of our customers now, Charles, I want euros, I want US dollars.
Yeah.
Where are you in those countries in relation to, I want the same real-time resiliency, the service, all the things. I don't want to use substandard correspondent banks in Europe and the US. So we're not going to the US dollar to conquer the US market. We're going there to get access to ACH, FedNow and a FedMaster account to mirror it so that we can do US dollars, euro sterling seamlessly on the platform. And then if you look at actual stable coins in relation to digital clearing, not crypto, but more efficient clearing, we can actually use that in relation to cash 100% held at Bank of England or ECB or the Fed.
Yep. That's a real different proposition.
And because of our business model where we hold it all at central banks and don't have lending and fractional banking balance sheets, it's becoming really powerful. So for the US, the strategy very much there on getting a new license that will take us 3 years. It's buy a US bank, do a minority to control transactions, keep the OCC happy, etc. and then get access essentially to the payment rails. And that will take us something like 12 to 18 months to sort of execute versus 3 years.
Yeah.
So once Europe is up, which is very imminent, my attention will turn to looking at buying a US bank.
I'll be seeing you landing into JFK a lot more frequently then. It's good. It's exciting. I mean, I guess going back to what we were saying earlier on, again, there's people who don't quite know what they're getting into, and then there's bad actors. And I mean, the sucky thing about that is bad actors are usually pretty innovative. They're quite, bad people, pretty innovative in terms of their ways. So like, how do you, as sort of security and structure and resilience across all of those things being so critical to providing the trust, the relationship, I mean, how do you stay ahead of the bad guys?
So I think the number one lesson we've learned in 9 years of building Alloy in terms of staying ahead of the bad guys, and here we're thinking more about fraud, but I think this is true from a regulatory perspective as well, which is the landscape's changing. And then as you enter more markets, you have suddenly, 25 different ways that you have to do things when you're onboarding a customer. The key is kind of future-proofing, because if you can just acknowledge that things are always changing, it changes your approach versus saying, I've now found the single best fraud model in the world. I'm going to use that forever and ever, and we're done searching. And so that was the unlock for us, was going, okay, if we can future-proof on behalf of our clients and make them resilient just by letting them act quickly meaning change the rules on the fly, add a new data source, put in a new biometrics vendor, put in a new document verification provider in 25 seconds and deploy it immediately, that lets them fight fraud in a way that's never been possible before.
Yeah. It's a weird one, that, isn't it? Because when you say, every bank has like here's my 8 million requirements, and the system must be future-proof forever.
Yeah.
And it's like, wait, so what does that mean? But what I'm hearing you saying is like, that's not necessarily like a magical technological solution. That's a mindset, right?
It's a mindset shift, yeah.
We're never done.
We know in this, so they give us, often banks will say, these are my requirements, and these are the 10, these are the credit bureaus I want, and we'll go, okay, we meet you where you are, but we all sort of go like, we're going to do what you want, and we're going to have these requirements. And then we are going to evolve together. We're going to take you to that next level together and find out what's new for you and what's possible for you in fighting fraud or, increasing conversion. And we'll do it in a really safe way so that you will feel like you're not taking any sort of additional risk on. We're holding your hand through the process. We're doing testing constantly and very clear kind of paper trail and audit. And so that's been really key, I think, to getting some of these very large bank clients we have in particular, who tend to be the most conservative, to actually adopt new ways of doing things, new technologies, new kinds of onboarding, and they're able to take a different potential. They want to grow with immigrants or young people. They can actually do that now in a sort of safer way.
Yeah, I mean, it's a difficult one, isn't it? The sort of paradox of digital is like inevitably, it's back in the day, when you say all your money's with the Bank of England, it's not literally, it's not in like a giant vault in the like it used to be, because that was safe.
The gold went to America, I think. Yes.
Yeah, exactly. But there was lots of steel that kept it very safe. But the sort of advent of digital, inevitably, it's less secure than lots of steel, right? So is that does that target particular groups from a vulnerability perspective as well?
Yeah, well, I think what we see is that fraudsters tend to target whoever's newest to market, whoever's launching now, because that's where they assume the defenses are lowest. And often that's true. If you are, especially in the United States, we'll see community banks go live for the very first time digitally. They've never done it before. They went from having 30 branches somewhere, and they're going live digital and importantly sort of nationally, which is a core strategy for them to grow deposits. It's important for their survival. But the second they go live, if they don't have a strategy in place, if they don't have a kind of fraud stack that's future-proof, they're going to get slammed with fraud. And we've seen that happen with banks who just it's all in good intentions, and then that's just sort of the way it goes if you don't have your defenses up.
There's a weird sort of risk reward bit, isn't there? It's like the fraudster. There needs to be a certain size for it to be worth them to place the emphasis on it, but not so small that it's meaningless in that sense. So it's an interesting balancing act. Again, fraudsters, super innovative.
And the real harm, I mean, the harm of the fraud numbers are staggering and it's awful. The part that really kind of grates at me is that the strategy is to shut down, just to shut off your digital channels, which we see constantly. We go, okay, they had to shut down for 3 weeks, or we're going to kill that product, or and it's a huge waste of resources. But it's also now, millions of end consumers or SMBs who are no longer getting that product or service.
And just to chip in now, one of my favorite topics, I'm afraid, back to UK. I wish it wasn't my favorite topic, but APP scam fraud and new rules in the UK. And with my Innovate Finance sort of hat on, we've been fighting so hard in relation to this. And it's almost like UK PLC, global fraud gangs come to the UK and fill your boots.
Yeah.
Because under the current, the rules that are coming in, basically reimbursement, not only we extended the definition to include things like romantic fraud or whatever it is, all the way through that essentially the banks and the PSBs will actually pay.
Yeah, the liability is sitting in the wrong places in many instances.
We've argued about big tech, telecoms, although I remember being in Downing Street 2 years ago trying to fight for them. We still are. Yeah. And those will have seen the CEO of the PSR resign last week, etc. And we've got a big campaign because the full 15K, essentially competition, EMI is not getting access. This is all consumer duty. But coming back to Laura's point, the UK, unless there's changes, right, you'll have the large banks actually blocking payments and taking the conduct complaints to minimise their fraud in relation to actually reimbursement. And it's just crazy.
Yeah, none of that leads to a great outcome for the customers, does it? But
it's terrible.
And I guess from so much news from the US perspective on this as well. I mean, there's regulatory changes across the board in terms of, who really is who is liable, who's taking the risk, whose licensing actually is it that's there.
Yes.
I mean, how do you think that's going to impact the market?
I mean, I think we look to the UK in many ways. The sort of UK's work on APP fraud, we think that's what's coming for us. I don't think it's going to be vastly different. The OCC has made it extremely clear whose responsibility all of this kind of risk management stuff is. And, I think it was clear to many of us that it was coming. I don't know that we knew how badly it would shake out in the US right now. I mean, I couldn't have predicted some of the players who have now gone under, but it is it's very clear to me that the licensed entity is responsible. If it wasn't clear before, it is extra clear now, and so we're all figuring out together how to make that risk management possible for banks who are struggling to adopt technologies and modernize.
Yeah, and that has to be beyond. The very fast worded bit at the end of a radio advert. It's like it needs to be not just the terms and conditions, but a real understanding of actually, as a consumer, the things that you're engaging with, and ultimately, who's responsible for those things.
It is funny
right?
to see. The SVB fallout was. It was like my friends were suddenly realizing what FDIC protection was. No one knew about, and no one knew that their cash up funds were actually somewhere else, right? I think it's just, there's a pro to obfuscation. Again, I don't want to know everything about, I don't want to know every ingredient in my vitamin. I don't want to know every single thing that's, in my car engine, but there's some level of education that you do need to have, and that's where we've learned it the hard way, I guess, in the United States. But I don't know, we haven't hit that right balance, and I actually don't know what that right balance is, because what level should we expect consumers themselves to understand when they're in these relationships with fintech companies, banking as a service providers, partner banks? It's not clear to me.
Yeah. I mean, the correction sounds very sensible from a consumer perspective in terms of you don't want that pendulum to swing too far to your point, Charles, that it starts making it prohibitive for customers to achieve.
Exactly.
Things.
Right.
But actually, and you can nod and nobody will see it on the podcast, but this probably makes it great from a competitive landscape perspective. It's going to be harder. You guys have both been sort of trailblazers, creating new businesses where there wasn't businesses before. It's going to be a bit harder to do that going forward because of all of the things that are going to be put in place to almost slow down that. It's almost like open up the door to innovation for a little while and, it's scary, close it for a little bit.
We're quite literally seeing our clients who took compliance very seriously from day one, as ClearBank did, they are winning deals. I mean, it's just it's very clear that is now a core part of the value proposition, where I don't think 3 years ago people cared that. I mean, it just was not top of mind.
Yeah.
Yeah, and of course, if you, as the B2B, if you want to service bigger and bigger clients, where do you want that business sitting and who with?
Yeah.
Because the regulatory intervention cost of slowing growth, investors don't understand that, right? They just assume it won't happen to the company they've invested in.
Yeah.
And the consequences, obviously, I mean, it's taken 9 years to, like you say, inching in. It's like the consequences of getting that wrong are catastrophic. Like it's not well, let's try, Southern Europe. Like it's like that's game over, as you said. That's game over in some instances. But building trust is really hard. Like losing it is real easy, isn't it?
Yeah, it is. It takes one instance. I saw, from some recent fallout, I had a friend of mine who knows nothing about fintech forward me an email because her school tuition payment was effectively gone, and her preschool had no recourse. The money was just gone. And so she was like, what do I do? What do I do? What is going on? Is the school going to continue operating? It was a real question.
And you were like, firstly, this is not financial advice, but if I was you.
Yeah, but that's it's like a hard lesson learned. And it's a shame for the industry that this is how we're all sort of improving is through these like very tough circumstances.
Well, it is, but it's also, I mean, I've been in investment banking all my life, right? And it's always been held that the banks, right? And London, washing money laundering through the London market. We do have some accountability in relation to the banks. And the good thing about APP Scanner, actually people are investing in AI and tools and really trying, because we should be stopping at the source, not arguing about the reimbursement of once it's happened.
Sure.
And obviously that's where the PSR wanted us to all be. And there is some great work going on. Tide, for example, that's one of our major embedded banking clients. They've invested substantially. They're also educating SMEs on fraud and all the rest and telephone scams and whatever, for education and literacy in relation to all of that. Really important.
Just to touch on that, because I think that's a major point, is the creation of the model in the way that, the old model is basically like when an aeroplane crashes. It's like find the black box, figure out what happened, but the plane still crashed, right?
Yep.
There's still the problem. Whereas exactly what you're saying is preventative, isn't it? And this is really with again, it goes back full circle to what we were saying at the beginning, which is if you've got the right technology, you've got the right infrastructure, you've got the right expertise, you're building processes to eradicate these things rather than correct them, right?
That's why Alloy's been so successful and the partners, because you need partnerships to do this. You need the best partner in tech to then create that architecture that you can actually exactly reduce your risk probability of the bad actors actually, stopping ClearBank being on the front page or me in front of the Treasury Select Committee.
Nice. You have to put your nice suit on for that one. But so I guess, look, this is like me asking, what's the 3 steps to alchemy, guys? Like, how do you explain? Like, but what are the steps that you can take to get this right, Laura? I know you put out a research report recently, didn't you? Sort of outlining hey, look, this is what we've done and this is how we see it. But outline that for us.
Yeah, we put out a report with Finterrell, and I think some of what we've come up with is not rocket science. It actually probably is intuitive to many of us who've worked in the industry for a while, and probably less intuitive to those who are newer to the industry. But I think one of the core things for me is if you're going to work with a banking as a service partner or a partner bank, anyone in that value chain, be really good at compliance. Like, do not cut corners. Maybe that's obvious to everyone now. And be really close with them. But that's what you have to have a really close relationship. I think what we're seeing is it was the arm's length relationships that were damaging, because if they have no idea what you're doing and you have no idea what they're doing, are you doing KYC? Am I doing KYC? Like there was genuine confusion there that we've seen of, there was maybe a policy, but like, were they really looking at it? I don't know. And so building in a system that lets you have that makes that relationship easy. So, and what I mean by that is having something like we built something at Alloy called Alloy for Embedded Finance that lets you have, no one else calls it this, and my marketing people would call me, but it's like sort of read-write access.
Okay.
So you as my partner bank, or you as my kind of EMI holder, you can see everything that I'm doing. You can control my policy, and vice versa. I can kind of show you everything that I'm doing and how I'm making those decisions, or you can make those decisions for me. But we've come to some sort of tight agreement and arrangement, and we're seeing everything effectively in real time, but how those decisions are getting made at onboarding and kind of ongoing transaction monitoring. And so it's really just about visibility and control. Yeah. And you can do that with technology. You don't have to do it with people, with headcount. You can do it with technology, but you have to have the right sort of tools and people in place to do that, and the right sort of appreciation, I suppose, for compliance.
Yeah. Well, and that's great for the relationship, but regulators love that stuff, right? Consistency of decision making, the fact that it's evidenceable, the fact that you can show through a model of why what happened, actually happened.
And it lets you scale. So yes, it lets you show the regulator that you're responsible, but it lets you actually scale without having a huge, overhead cost of people who are manually doing all of that stuff today, which is really painful, but it's how a lot of the industry operates. Yeah. But it's also cultural shit. Like we all have to sort of agree that this is how we do business now.
So what do you want to see next in this space? Is it more on that front from an automation perspective? Is it the progressiveness of the regulation? Is it, what do you want to see?
Well, there's a number of things. I mean, the phases you talked about earlier in terms of embedded finance, embedded banking, so branding, credit cards and all those sorts of things, to where we are today, to realizing that 35 billion or whatever the large number was that Laura quoted. It's a massive
After
market.
An hour, it's 40 billion. Like, it's going up that quickly. So it's...
we're really excited in that space, right? In terms of embedded banking for the likes of regulated players of doing it at corporates and changing a number of industry verticals, whether it's travel or healthcare or whatever, in relation to working capital plays, efficiency plays, but also security and safety and regulation plays. So being in healthcare or private healthcare, I make my claim or I get my cash in 8 weeks. What about an AI automated process where I get the cash in 2 or 3 days? Well, to change that infrastructure, you need something like the ClearBank infrastructure with all those partners to actually make it real time and get the tech to do the work rather than the paper process with people. And I think there's some great opportunities in multinationals in relation to the embedded banking side. Then you can bring in other providers on cards, on loans and all of that in relation to anyone playing in financial services. I think it's really exciting. And amazingly enough, the KYB, KYC, fraud detection, actually, if you add in a digital coin into that as well, the level of security and safety compared to what we've had today or going back light years ahead. And then it's on cloud native resilient platform. That's some big opportunities which multinationals, they want to compete against each other in AI land and real time. They're going to need that infrastructure.
Definitely. It feels, we say, the digital banking is only 1% finished. It feels like the stuff ahead of us, I know it's tiring 9 years in, but like the next 10 years, there's going to be so much more change than ever before, right? So
let's do it faster than 10 years.
Yeah. Well, the pace is definitely picking up.
I want to be on a beach somewhere.
That sounds
fewer
good.
than 10, yeah.
We'll give you a ClearBank towel as well.
Thank you. Oh, good. Thank you.
All right. On that note, we are going to have to wrap up, I'm afraid. So where can people learn a little bit more about all the great stuff you're doing at ClearBank?
So I'm not an X-man or Twitter the rest of it. I'm Friday old-fashioned, if you like. LinkedIn, you can get me, or charles.mcmanus at clear.bank. I'm very happy. Any questions, help, or industry-wide issues, very happy to help.
Sounds good. Laura?
I'm on LinkedIn. I am on X, Laura Spiekerman. Yeah, alloy.com. And then I'm just Laura at alloy.com if you want to reach me.
Very good. I'm predominantly lurking on LinkedIn as well these days, so you can find me over there. Thank you so much for listening, guys. If you do like what you heard, follow the podcast. Don't forget to leave us a review. It helps us make it better and helps other people find the show as well. As always, if you do want to join the conversation, you can find 11FS on pretty much every social media channel. Just search for 11FS or Fintech Insider, or if you want to, email us on podcasts@11fs.com. Thank you very much for listening. Goodbye.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak. So sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Size goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.